$38 trillion. That's how much debt the United States has right now. Not next year, not some future estimate, but real debt on the books as of December 2025. And if you think that number has nothing to do with your life, your savings, or your future, then you really need to pay attention to what's happening next. Because while most people were scrolling social media, watching Netflix, and arguing online, the largest financial institutions on the planet quietly started doing something they haven't done in decades. BlackRock manages over $10 trillion. That's more money than most countries produce in a year. And over the last year, they quietly reallocated around $2.1 trillion away from US-centered assets. Not because America is collapsing tomorrow, and not because of politics, but because the risk profile changed. BlackRock doesn't make emotional decisions. They move when the math changes. And when the biggest asset manager in the world starts reducing concentrated dollar exposure, it's not noise. It's a signal. They began moving massive amounts of money out of dollar-based assets. No press conferences, no dramatic headlines, just slow, calculated moves behind the scenes. This isn't a conspiracy theory. It's public data, treasury reports, and official filings that anyone can verify. By the end of this video, you'll understand what's really happening, why it's happening, and why it matters to you personally. Because this situation isn't random. It follows a very old pattern, one that has repeated itself multiple times over the last 500 years. The same warning signs, the same stages, and the same ending. And right now, we're watching it unfold again in real time. Global debt has now reached $251 trillion, according to the IMF. That's more than 235% of the entire world's GDP, the highest level ever recorded during peacetime. In the US alone, national debt jumped from $36.1 trillion in January 2025 to $38.4 trillion by December. That's a $2.3 trillion increase in just 11 months. But here's the part almost no one talks about. This exact setup has happened before, and every single time, it ended the same way. In modern history, there have been 3 major cases where a global reserve currency collapsed. And in all 3 cases, the country holding that currency lost its dominance within about 3 years after the smart money started leaving. Not similar situations, identical patterns. Once this process reaches a certain point, it becomes mathematical, not political, and almost impossible to stop. Every major economic collapse followed the same 4 stages. The first stage is the rise. A country becomes the center of global finance. Money flows in from everywhere. Its currency becomes the standard for international trade. Banks expand, markets boom, innovation accelerates, and confidence is absolute. This phase usually lasts several decades. Then comes stage 2, overextension. Success creates arrogance. Governments start spending more than they can afford. Wars, foreign interventions, social programs, all funded with debt. Asset prices keep rising, so nobody worries. Stocks hit records, real estate explodes, and central banks print money to keep the system going. On the surface, everything looks great, but underneath, the foundation is weakening. I can't cover everything in one video, so drop a comment about what you'd like to learn next. A huge part of understanding money and how it really works is explained in The Psychology of Money by Morgan Housel. Check the links in the description. Buying the book also supports the author. Stage 3 is the most important and the least visible. the silent exit. This is when institutions, large investors, and wealthy insiders quietly start moving their money elsewhere. No panic, no headlines, just steady capital rotation into safer assets and other countries. This phase usually lasts between 18 and 36 months, and most people don't notice it until it's almost over. This is exactly how Stage 3 looks in real life. Institutions like BlackRock don't announce exits. They rebalance. They shift weight from US Treasuries into infrastructure, commodities, emerging markets, and non-dollar assets. On paper, it looks boring. In reality, it's defensive positioning. The same type of slow, disciplined capital movement that happened before Spain, before Amsterdam, and before London lost financial dominance. Stage 4 is the collapse. The currency loses its special status. Inflation surges. Interest rates spike. Asset prices crash all at once. Banks fail. Pensions disappear. And the middle class takes the biggest hit. And everyone asks the same question. How did we not see this coming? We've seen this exact cycle before. In the 1500s, Spain was the most powerful empire on earth. Gold and silver poured in from the Americas, and the Spanish real became the world's reserve currency. Madrid was the financial center of the world. But Spain spent far beyond its means, borrowed heavily, and ignored the warning signs. Wealthy families and banks quietly moved their money out. Then defaults began. Inflation exploded. The empire collapsed, and its golden age never returned. Next came the Dutch Republic in the 1600s. Amsterdam became the richest city in the world. The Dutch invented modern finance, stock markets, and global banking. The guilder was the reserve currency. But war spending, excessive debt, and massive asset bubbles followed. Smart money left quietly. Eventually, the system broke, banks collapsed, and Dutch dominance vanished almost overnight. Then there was Britain. For over 200 years, the British pound ruled global trade. London was the financial capital of the world. But 2 world wars buried Britain in debt. Capital slowly moved to the United States. The pound was devalued, Britain needed IMF bailouts, and its reserve currency status was lost forever. 3 empires, 3 reserve currencies, same pattern, same ending. Now look at the United States. After World War II, the dollar became the global reserve currency. Capital flooded into America. U.S. markets became the deepest and most powerful in the world. This was Stage 1. Then, in 1971, the dollar was removed from the gold standard. From that moment on, there were no real limits on spending. Debt exploded. Today, total U.S. debt isn't just government debt. When you add corporate debt, household debt, student loans, credit cards, auto loans, and medical debt, the number goes well over $100 trillion. That's roughly 370% of GDP. For comparison, Spain collapsed around 200%. The Dutch collapsed around 250%. Britain lost reserve status at 130%. Just the interest on U.S. debt now costs over $1 trillion per year. Not paying it down, just interest. And the only way to cover that is by printing more money. That's why inflation surged, asset prices exploded, and inequality widened. All classic signs of late Stage 2. Now we're in Stage 3. Foreign governments are selling U.S. treasuries. China, Japan, Saudi Arabia, European countries, all reducing exposure. The Federal Reserve itself is shrinking its balance sheet, and major institutions like BlackRock, JP Morgan, Goldman Sachs, and Bridgewater are quietly shifting allocations away from heavy dollar dependence into real assets, international markets, and commodities. This is exactly what happened before every collapse in history. The smart money moves first. If you want to get out of debt and think about money differently, I highly recommend reading these two books, along with other books linked in the description. These books dig into how money and the economy really work, showing you the system from the inside. It's the best investment you can make in yourself, because understanding this stuff gives you control over your finances, helps you make smarter decisions, and protects your future wealth. So what happens next? The dollar doesn't disappear overnight. Instead, it slowly loses its dominance. More trade happens outside the dollar. Alternative systems grow. Demand for dollars falls. And when those dollars come back into the US economy, inflation accelerates fast. At that point, the Federal Reserve faces an impossible choice. Raise rates high enough to stop inflation and collapse the economy, or keep printing and destroy the currency. Either way, asset prices fall, banks fail, and the middle class pays the price. This doesn't happen because America is weak. Every empire believed it was different. Spain had the strongest military. The Dutch had the best financial system. Britain had the largest empire in history. None of that stopped the math. So what does this mean for you? It means understanding the pattern early gives you options. Diversification matters. Real assets matter. Geographic exposure matters. Skills and relationships matter more than ever. The people who survive these transitions aren't always the richest. They're the ones who see what's coming and act before the crowd. We are in stage 3, the silent exit. The signs are everywhere if you know where to look. Stage 4 always follows. The question isn't whether this pattern works. It always has. The real question is whether you'll be prepared when it does. If you found this video useful or have questions, drop a comment below. I read every single one. Don't forget to subscribe and hit the bell to catch the next episodes.